Imagine walking through a lively bazaar. To your left, stalls brim with season's freshest fruits, promising immediate delight. To your right, vendors offer vintage treasures, their value appreciating over time. This scene mirrors the investment world too, where choices often boil down to growth versus value stocks. Welcome to Value Focused. Today we'll unravel the distinctions between growth and value stocks, helping you navigate which might align best with your investment journey ahead. See, growth stocks are akin to that young plant flourishing swiftly. These are shares in companies anticipated to expand at an above average rate compared to others. They often reinvest their earnings to fuel further growth, meaning dividends are very rare. Investors are drawn by the potential for substantial capital appreciation. Consider a burgeoning tech firm introducing groundbreaking software. Its profits might be modest now, but with increasing market demand, its earnings and the stock price could actually soar. Value stock resemble that sturdy oak, representing companies with solid fundamentals trading below their intrinsic value. These stocks might be undervalued due to market overreactions to short-term challenges. Investors usually see an opportunity, believing the stock price will eventually reflect its true worth. Imagine a reputable manufacturing firm facing temporary setbacks. Its stock price dips, but its long-term prospects remain very strong. Savvy investors might view this as a chance to buy at a discount. Let's break down the key differences between growth and value stocks. See, growth companies will reinvest their profits, often skipping dividends. Value companies might offer regular dividends, sharing profits with the shareholders. Growth stocks can be more volatile with prices hinging on future performance. Value stocks might offer stability but can be overlooked by the market. Growth stocks often have higher price to earning ratios, reflecting optimistic future earnings. Value stocks typically have a very low PE ratios, suggesting that they are undervalued. You can compare this with the industry PE as well. Performance in different market condition affects a lot. See, market dynamic influences these stocks very differently. In bullish markets, growth stocks might outpace due to investor optimism. Conversely, in bearish market or uncertain times, value stocks with the perceived stability might hold up better. So which should you actually choose? Your choice actually depends on your personal factors. You should decide what are your investment goals. Are you seeking rapid growth or a steady income in the long run? Risk tolerance also says a lot. That can you handle potential volatility of the growth stocks, or do you prefer stability of value oriented stocks? Time horizon plays a major role over here. Longer horizon might favor growth investments, while shorter ones could align with the value stocks. Just as balanced basket from the market offers both immediate pleasure and the lasting value, a diversified portfolio can benefit from strengths of both growth and value stocks. Enjoyed this explanation? Subscribe to Value Focused for more insights, and let's continue this investment journey together. See you in the next one. And yeah, remember, understanding your option is the first step towards the informed decision for your investment journey. Thank you.